Good morning, everyone, and happy new month, happy new week. Today, we'll be having a very interesting session. We'll be talking about the top key market events to focus on this week. So, once we cover that, we'll also be looking at the charts, try to understand the prevailing market patterns. And once we cover that, hopefully, everyone will trade from an informed perspective. So my name is Rufus Kamau, markets analyst at FX Pesa, and this is the this is the market snapshot series. So feel welcome. Once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's begin with the economic calendar. Try to understand what are the key market events, and once we understand the key market events, try to focus on the important ones. And once we do that, hopefully you will have a very successful session. And I hope that you guys enjoy a profitable month as well as a profitable week. So hello, Emmanuel. Thank you for joining. Hello, Mavado. Hello, Pavinas. Thank you for joining. So let's get things started. So today, as usual, we know it's Monday. It's usually a very slow day in the markets. So we don't have much happening, even if we have quite a good number of economic reports that are yet to be released. So the key highlight of the day is that for both Canada and the USA, they are both celebrating Labor Day. So Labor Day is on the 2nd of September this year. So today, we will not be expecting much of market activity, especially considering that the banks in both Canada and the US will be closed. So the stock market will also be closed, commodities markets will be closed. So the only markets that will be fully open are basically just the currency markets as well as the cryptocurrency markets. So that being said, we expect a relatively slow day with little to no activity happening from these major pairs. So besides that, we have quite a number of releases that have come in this morning. For instance, capital spending quarter over year for Japan had a slight improvement to 7.4%, but it missed expectations. Final manufacturing PMI for Japan came in at 49.8. This is still below the midpoint of 50.0, which basically means that manufacturing in Japan is still in contraction territory. So MI inflation gauge month over month for Australia came in at negative 0.1%, a big drop from the previous increase of 0.4%. ANZ job advertisement, this basically tracks the job advertisement for both Australia and New Zealand. We saw a drop by negative 2.1%, meaning that the job market is slowing down, which is slightly better than the previous reading, but no much of a market reaction from this. So building approvals in Australia spiked higher by 10.4% in the last month, whereas company operating profits quarter over quarter were down negative 5.3%. So China's Kaizen manufacturing PMI came in at 50.4. This is a big improvement from the previous reading. So we basically shifted from below 50 to above 50, meaning that manufacturing is entering an expansionary territory. So retail sales year over year for Switzerland came in high and positive at 2.7%, way higher than the previous reading of negative 2.6%. Meaning that retail business is booming, or basically the consumer purchasing power is increasing. So commodity prices year over year for Australia worsened to negative 5.2%. Spanish manufacturing PMI at 50.5, a slight slowdown, but still within expansionary territory. So manufacturing PMI for Swiss franc or for Switzerland came in at 49.0, a big improvement from 43.5 in the previous reading. And lastly, French manufacturing PMI came in at 43.9, a big improvement from the previous reading of 42.1, but still within contractionary territory. So nothing much is happening in the markets today. So I'll be looking at other data points to try and help build a better image of what's happening. So let's take it a little bit back and look at what happens in the market on Friday. So on Friday, the biggest news that we were expecting was the core PC price index, which came in at 0.2% as expected, with US inflation year over year remaining at 2.6%. This was a good data point, and it might imply that we continue seeing more pressure on the Fed to consider cutting interest rates on the next meeting, which will be happening on the 18th of this month. So as we continue, I would like to wish you and everyone who has joined the session a happy 11/11, which is the current time. So let's move on to other news in the markets that you're expecting. So I'll be starting with the key highlights from trading economics. So China manufacturing PMI beats estimates. This was a good news, especially for oil traders, even though factors are showing that oil may continue weakening for the rest of the week. So the Kaizen China general manufacturing PMI rose to 50.4 in August 2024 from July 9-month low of 49.8, which was above the market forecast of 50.0. So output growth accelerated amid an upturn in new orders and a stabilization in employment. Meanwhile, price pressure eased and confidence hit a 3-month peak. So this is rare to see good news coming in from China. So it's a good boost to start off the week. Though for oil markets, we are seeing a completely different scenario. So among other highlights that we have seen, oil holds decline on higher supply expectations. Indonesia inflation rate at 2.5-year low, and that was 2.12% in August. So European markets muted at start of the week, little to no activity as usual on Monday. So Russia manufacturing growth at 13-month low. Spain factory activity growth slows further, and Turkey GDP growth slows sharply in Q2. Those are the key highlights as of this morning. So on the earnings side, I will be expecting quite a number of companies to be reporting earnings this week. So for Broadcom to be reporting on the 5th of September, that is the third quarter earnings. So we'll be expecting to see some good activity from Broadcom. So for those who are new, you should know that Broadcom is a big company in the SP 500. So I just want to show you a heat map of the same, so you understand what I'm saying when I say Broadcom is a big company. So when we are looking at the performance of the Nasdaq 100 index, this is a heat map as of Friday last week, and this is how the stocks ended their day. So we had Apple closing slightly below at negative 0.34%. Microsoft was largely positive. Nvidia, Amazon, Tesla, Meta or Facebook was up. Google was doing well, up over 1%. And AVGO is the trade name for Broadcom, and it was up 3.75% on Friday. So with the company set to report earnings, you can see the level of optimism, and it has a big weighting. So if you compare the size of the squares, which represents the weight of the company in the Nasdaq 100 index, then you can see that AVGO is slightly smaller than Meta or Tesla, but still a significant stock in the index. So after Nvidia beat both earnings as well as revenue, now we are seeing yet another company in the SP 500, in the Nasdaq, yet to report its earnings this week. So there will be a key focus on this stock to understand the current trend in the Nasdaq as well as the SP 500 indices. So with that in mind, now we should be expecting to see a lot of commentary, analysis ahead of the earnings, and sometimes you might see companies doing this. Investors doing this, where they literally buy the stock ahead of the earnings, and then on the earnings date they sell, similar to what happened with Nvidia earlier in the week. So another company to be focusing on this week will be Kroger, which will be reporting on 6th this week. So we could be seeing some activity coming in from Kroger. So that being said, away from the earnings side, we also be looking at a new development that is currently happening, where the Swiss franc carry trade comes fraught with a safe haven rally risk. So we know that for the last couple of years, and I would say the last 2 decades, Interest rates remained relatively low in Japan, close to zero, and this allowed a lot of investors to borrow cheaply in Japan and then use the funds to invest in other markets where they could get a much better yield. So it's literally just borrowing at close to zero interest rates, and then mostly investing in US assets, including US treasuries as well as US indices and stocks, which had a very good return. However, over the last 1 month, what we saw is the Japanese yen basically strengthening, the Bank of Japan hiking interest rates, which basically triggered a reverse carry trade. So when that happened, investors started looking for a new way of practicing the carry trade. And what we have been seeing is much more demand for the Swiss franc, where the interest rates are currently really low. So from what we have been seeing, especially in the net short positions, and when we talk of short positions, think about it this way. An investor borrows money in Swiss franc and then converts the Swiss franc to another currency, let's say the US dollar, and then buys US treasuries. So if the US treasuries are yielding 5% and you're borrowing at 1%, then you get a risk-free return of about 4%. So this has been a big practice, especially by big banks and hedge funds. And in that case, we are seeing a big shift in the total value of short selling positions between the Japanese yen and the Swiss franc. So overall, what we have been seeing over the last couple of years is the net short position, the one in yellow, increasing for the traders who had basically borrowed in yen. But then around, I would say, July, August, we saw a very big drop in the net short position in the Japanese yen, all the way down to the negative side. So we are looking at negative 2 billion, which basically makes it a net positive position. However, for the other line, it's the Swiss franc, and you can see that the net short position is increasing, meaning that a lot more investors are borrowing the Swiss franc and using the Swiss franc, the exchange currency, to basically buy other assets in other markets. So this is expected to continue as a trend. So there is more two-way risk now in the yen than there has been for quite some time, said Bank of America senior G10 FX strategist Kamar Sharma. The Swiss franc looks the more logical funding currency for choice. So we could be continuing seeing the Swiss franc strengthening, especially considering the difference in monetary policy, where on one side, the Bank of Japan has been hiking interest rates, and on this other side, the Swiss National Bank has been cutting interest rates, making borrowing cheaper if you are using the Swiss currency. So as long as they continue cutting interest rates, then it becomes a much better currency to borrow from compared to the BOJ, where we are seeing investors borrowing at high interest rates, and the Bank of Japan could continue hiking interest rates. So in this case, you can see the August turmoil that happened. So this is the implied 1 month US dollar Swiss franc volatility, a gauge of expected moves in the pair based on options prices, with a higher number showing investors expect bigger swings. So since July, there has been a strong rally in the implied volatility. So any carry trade is inherently risky, and this is particularly true for those funded with safe haven currencies, said Michael Pwempel. This is a FX strategist at Deutsche Bank. So the main risk is that when yields move lower in a risk-off environment, yield differentials compress and the Swiss franc can rally. So there is a big expectation that the Swiss franc could continue rallying as the carry trade shifts from Japan into Switzerland. So among other news that we'll be focusing on today, one is a highlight of what happened and what we're expecting for the week. So crucial September jobs report kicks off a new month and what to know this week. So it's officially the US non-farm payrolls week. So we'll be expecting the non-farm payrolls, which is a report on the job market in the US, and it will be happening on Friday. Remember, the non-farm payrolls come on every first Friday of the month. So the first Friday of this month will be on 6th of September. So we should be expecting a big report, which has the potential to make a big market move. So for the month, the SP 500 added nearly 2.3%, while the Dow Jones added 1.8%. And sits at all-time high, while the Nasdaq Composite added more than 0.6%. So U.S. markets will be closed on for Labor Day on Monday. That's today. So attention turns to incoming labor market data set for release throughout the week. So the August jobs report due out on Friday will headline economic releases in the week ahead as investors look to see whether the signs of a slowing. The signs of slowing in the July jobs report were overstated or an early warning of a broader slowdown. So updates on job openings and private wage growth are also on the schedule, as well as activity checks from the services, as well as the manufacturing sectors. So in corporate news, quarterly reports from Broadcom and Dick's Sporting Goods headline a quiet week for earnings releases. So remember, the earnings season is over, so we expect fewer and fewer companies to be reporting earnings. So if you look at the year-to-date performance for the top 3 indices in the US, they are ranging between 10 and 18%, 10 being the slowest, which is the Dow Jones, and SP 500 and the Nasdaq are up about 18% year-to-date. So the key focus will be on the labor market, but also we have a big report coming in from the Bank of Canada. So we should be expecting to see another interest rate cut by the Bank of Canada, and this could cause increased volatility in the markets. So just trying to scan this faster. So also, if you are a keen follower of DocuSign and Neo, they'll be reporting earnings on Thursday. So let's shift back to the calendar and see the key highlight here. So from the calendar here, you can see that on Wednesday at exactly 4:45 p.m., there will be a Bank of Canada interest rate statement and then a decision on the overnight rate. So as of the previous meeting, interest rates were held at 4.50%, and we expect a 25 basis point cut, which could drop the interest rates in Canada to 4.25%. So if this is actually implemented, it's basically very bad for the Canadian dollar. So we should be expecting to see the Canadian dollar weakening this week. So this is only an expectation. So once it's confirmed, that's when we'll be seeing the real performance of the Canadian dollar. Though I expect the investors to try and front run this. So also the job openings are expected to drop to 8.0 million from the previous reading of 8.18. So as you can see, this has been the prevailing trend. So all we have been seeing is a drop in job openings. These are basically job advertisements. So if they keep on reducing, then it shows that the labor market is weakening. So those will be the key highlights for the week. So I'm still trying to see if there's anything else I missed. Yes. So there's a big report on oil this morning. So oil extends losses on weak China data, prospect of higher OPEC Plus supply. So among the key highlights is that one, OPEC is set to raise production from October. So OPEC, which is short for oil producing and exporting countries, which are led by Saudi Arabia, they have been practicing oil output cuts for the better part of the last 2 years, and that has supported oil prices remaining high. But then that is set to end in October, just 1 month from now. So when we see this happening, then we should be expecting to see an increase in oil production, which may have a negative impact on prices. Remember, for investors that majorly trade oil, they do so in futures. So oil that will be produced in October could be within the market already, and we could be seeing prices dropping as a result of this expectation that the OPEC countries will be expanding their output. So also there has been a peace agreement in Libya where the two warring parties have now agreed to resume oil production. So we could be seeing some more output coming in from Libya, which would increase supply of oil, which has the opposite impact on prices. So we could be seeing the prices dropping further. And of course, China manufacturing activities are currently the slowest in 6 months' time. So oil prices extended losses on Monday on expectations for higher OPEC Plus production starting in October. As signs of sluggish demand in China and the US, the world's two largest oil consumers raised concerns about future consumption growth. So the OPEC and their allies, a group known as OPEC Plus, is set to proceed with a planned oil output hike from October, 6 sources from the producer group told Reuters. So, 8 OPEC members are scheduled to boost output by 180,000 barrels per day in October as part of a plan to begin unwinding their most recent layer of output cuts, which was about 2.2 million barrels per day, while keeping other cuts in place until end 2025. So that's one of the key and strongest highlights in the markets today. And now I believe you can shift and get into the favorite part of the presentation, where we do some technical analysis and understand what might be the prevailing market patterns before we end the session. So good morning and happy new month, Noniza. Good morning. You can see Kiptum, Wangari Patrick, thank you for joining. Hello, Hilary. Hello, Wilbert. So as always, if you have any questions related to the presentation, feel free to type that in the comment section, and I'll be responding to those questions on the go. So let's jump straight to some technical analysis, try to understand what are the prevailing market patterns. So I'd like to begin this part of the presentation by focusing on the dollar index. So the dollar index has largely been on a bearish momentum for the last couple of weeks. And by couple of weeks, I mean 9 to 10 weeks. So this has been the overall direction. So very strong bearish momentum with last week being one of those rare weeks where we see the dollar index strengthening. So there has been quite a good rally in the dollar index, and now it seems to be facing some form of resistance along this trend line. So if I was to remove these horizontal lines, just try to make my chart clearer, then you'd notice that over the past, I would say 5 weeks, this has been the prevailing trend line, indicating that the market is forming lower highs, and from this high and then this and then this, then this is likely to be an area where the dollar index continues weakening as the market looks forward to an interest rate cut that might happen on the 18th of September. So with the dollar index being pretty weak, but last week being pretty bullish, we are seeing a similar pattern here. So for instance, if you look at Euro USD, it was very strong, though it reversed its performance towards the end of last week. So from the forward chart, you can see while the dollar was strengthening, it was also strengthening against the euro, which gave a much needed pullback. And this week, we have the potential to see a continuation where the market went all the way back down, but then it could resume the bullish momentum. So the potential for the euro now making a big bullish momentum is more reasonable. But now, before you go ahead and consider, let's say, going for bullish positions on Euro USD, it might make sense to go to a smaller time frame, let's say the 15 minutes chart, and then observe this. So this has been the trend line marking the resistance for last week. And as you can see, as early as Monday morning, that is right now, we are seeing signs of the euro breaking the upper trend line. So this could potentially rally, though I expect a slower market today. So for pound USD, it's a similar story. We saw the pound weakening against the dollar last week. So we don't have a break yet. So it seems like this has been the resistance since last week, and the support area or the sequence of lows have been following this path. So we'll be waiting to see if we get a break outside the pattern here. So for now, the market remains within that channel. It's on the 15 minutes chart. So unless we get closer to either of the two trend lines, it doesn't make out of sense to be looking for a position here. So for pound yen, we were trading in this little triangle for quite a period of time. So nothing much was happening here. It was a market that was majorly making a sideways momentum. So today at the first hour of trading, we had a nice breakout before the market pulled back downwards. And now we are seeing a strong momentum break upwards. So in this case, it might make more sense to enjoy the newfound volatility. So in this case, with an expectation of the next leg extending all the way up to 195.786. So that could be, apologies, that could be the literal target for the day or for the week for pound yen traders. It seems like a significant break. If you look at the forward chart, it's a very nice break, so I expect a continuation of the same. Perhaps this could be our trade for the day, since it doesn't even touch the US dollar and the Canadian dollar, which are the two currencies affected by the Labor Day celebrations in the US as well as Canada. So in this case, an extension of this market rally to 195.786, which marked the previous bottom here when the market was going down, bottomed here before it rallied and broke that area. So now we are seeing this recovery being much stronger. So that's a likely play for the day. So the Australian dollar has been pretty strong, though last week the dollar was pretty strong against other currencies. So we saw a very strong pullback, but the market was unable to break this support area here. So there was quite a struggle to attempt to break, which failed even on Friday. And now we are seeing the market bouncing quite strongly. So in this case, I would be more interested with the resistance areas we have seen. So before we even start focusing on the next high, I would be very interested in the previous highs that we saw last week. So the first high was around here. Then the other highs are around this area here. And then, of course, we had the highest price of the week. So if we are going for the weekly high, then that might be the likely target. But if you do the different take profits, then you might want to consider the three levels. So first level around here, which was the previous high here. Then this high, which had combined two candlesticks testing it. And of course, the highest price, which was on Thursday last week. So we could be seeing this as a trend throughout the day. So USDN, we saw the market holding for weeks under this particular trend line. If you count the number of weeks, this is 8 weeks where the market was unable to break. And now we can see the market breaking towards the upper side since Thursday last week, a pullback, and Friday we continued moving higher. And today we are seeing accelerated momentum higher. So the USD JPY currency pair could potentially extend this rally to around 147.344. So the Japanese stock market is now making progress after really weakening here and again, failing to pull back downwards and instead going for a new high on Friday. So after the pullback, notice this was the major resistance area. So after breaking, there was a pullback. So we are looking at a breakout retest continuation pattern. So in this case, some further momentum higher for the Nikkei 225 index. So we could finally be breaking above this area, which was basically holding the market hostage below that. So now looking at gold, there was a major breakout happening on Friday. So gold had basically been trading in this kind of range for quite a number of days, up until on Friday it made a breakout towards the lower side. Now we are seeing the market bouncing from this low here and potentially making a rally back up. So if we continue seeing a weak dollar, then we could be seeing a retest of the breakout point. So this is where gold broke out of the trend line. So in this case, if we are looking at a breakout retest continuation, then the idea is that the market gets back to this area before now potentially making a big move downwards. So for now, we ignore this and we work with what we have. And it seems more likely that gold might be recovering, heading back to 2,515. So as for Brent oil, we had this potential double bottom. Market didn't complete the pattern, didn't get to the neckline. So the high we saw last week was lower than the previous week, indicating that the bearish momentum survives. So we continue seeing further bearish momentum. So there was a big sell-off on Friday. We didn't quite get to the target, which is 75.246. And this morning, we are seeing the market bouncing quite strongly, though I'd still be insistent on looking for a short selling trade once we see a sign of the market moving downwards. So we don't know where it's going to happen, where we'll be able to capture a short selling trade. So it could be any of these levels. I'm just drawing to show you the potentials. But then for now, we take on the bullish momentum. And once we see signs of sellers coming back, as I've shown you, the worries about expanding oil supply in October could further weaken oil prices. So at some point, we should be expecting to look for a short selling position with a target on this previous bottom around 75.246. So for now, let the market rally. We'll be expecting to capture it on the short selling side. So US equity indices were trading on a flag, especially for the Nasdaq 100 index. It managed to break the flag last week on Friday. And now what we are seeing is a much more different pattern, which I would describe as some form of triangle. So if you look at the last 3 days of trading and you compare those highs with the lows, then it seems more likely that the market is performing along these lines. So in this case, the highs are more of horizontal. So if you look at the highs that we saw last week, this high and this high and this high, they are all kind of horizontal, whereas the lows have been getting higher. So in this case, we might expect to see a break soon. And since we already broke outside the flag here, when the market started trading higher, then the idea is to go for a bullish trade when the market breaks above this resistance area here. So still positive on the Nasdaq. The Dow Jones hit a new all-time high on Friday. Today, it's looking to extend that rally. So after the big quick retest here, which formed a new Asian low, now we are seeing the market bouncing off strongly. So from the daily time frame, this is how it looks like. So if you look at the last 2 days, there was some pretty good, strong momentum. So even though the markets are pretty slow today, we could be seeing a short push for a new all-time high. And this is in comparison to last week on Friday's high. So we could be seeing some further upside potential since the attempt to move downwards this morning failed. So for the SP 500, still quite a struggle for the market to break and form a new all-time high. So we are less than 1% from the all-time high, so 0.55%. So from the 4-hour chart, it's more of a sideways momentum for the last 2 weeks. So clearly, we are watching out to see if there will be a breakout above this area here. So that has been the story of the last 2 weeks. So now if you go to a smaller time frame, say the 1-hour chart, then this is the overall price action. So clearly, not the best area to be participating in the markets. But then the idea is to go for a bullish trade once the market breaks this particular trend, resistance area. So anytime you see the market trading along this area here, then that might be the trigger for a bullish position. So Bitcoin was making quite some progress, rallied all the way up and got to a new weekly high of $65,000. But then since then, we have seen a big sell-off, basically leading to further downside momentum. So from the 1-hour chart, it seems more likely that we could be seeing some further weakness in Bitcoin, as now the market seems to be headed back towards the lower trend line. So from the 4-hour chart, we had identified a support area here, and this support trend line has already been broken and the market is trading below it, which means we could be seeing some further downside momentum on Bitcoin. So I mentioned something about the Swiss franc. Clearly, you can see since we got to this high, and this was around the 1st of May this year, there has been a consistent bearish momentum for 4 straight months. And now, as we enter the month of September, I expect some further downside momentum. So the overall swing here is all the way back down. So even though we had quite a number of days where the dollar was strong and it gained on Thursday and Friday against the Swiss franc, the overall expectation is that the market still pushes further downwards and the dollar index weakness continues. So there still exists a trend line here along the upper trend line. So here we are seeing the dollar gaining against the Swiss franc. I don't believe it will be that strong this week. So there's a good chance we could be seeing a continuation of the bearish momentum. So it would make more sense to watch the price action around the current price level. So this lack of volatility here might imply that the market is weakening and we could potentially see a big drop coming up later in the week. So be on the lookout for short selling positions in USD trading against the Swiss franc. So for New Zealand USD, we had this strong bullish momentum last month. And now as we enter a new month, we could be seeing the New Zealand dollar finding support. So we haven't found support yet. So after the big drop here, the market got even lower. And now the potential is for the market to find support somewhere. So potentially looking at this and the market finding support at some level, potentially this area here, and bouncing strongly as the New Zealand dollar continues being strong in the markets. So that's it for the day. Also remember, we have a big event coming up this Friday. So if you are within the Nairobi area, you should be expecting to have a very nice event. So I'll try and share my screen so I can give you more details. So we'll be having a Pips and Branch event in Nairobi. It's on Friday, the 6th of September, and the event will be running from 1 to 4 p.m. So as always, our events are always free of charge, and it will be at the Indigo co-working space in Westlands, Nairobi. So what to expect is timely insights into the market volatility during the NFP data release. So remember, the NFP will be at 3:30 and the event is from 1 to 4 p.m. So we'll be taking some good coverage of the non-farm payrolls. So there will be expert-led sessions on market analysis, trading strategies, risk management, as well as trading psychology. So what you need to carry to the event is just your ID, and if you have another trader, a fellow trader, make sure to invite them and bring them over for the event. Hopefully everyone will be able to benefit from the event. So that being said, let me check the last comments before we end the session. So look at crude oil. Thank you for the request, Edward. I already checked that out. Hello, Willie Bet and John Mithamo. How does a weak dollar affect SP 500? I think this is a question that was asked the same time last week. So the SP 500 is largely affected by the companies that constitute the SP 500. So remember, the SP 500 basically tracks the performance of the top 503 companies in the US. So if you're trying to understand the direction that the SP 500 will take, you look at the top companies in the 503 companies. So since it's a weighted index, there are companies that have a much bigger weight, and those tend to indicate the eventual direction of the SP 500. So I can try and highlight this for you using a map. So let's see. So this is the map of the SP 500 companies. If you look at the year-to-date performance, this is how they have performed. For instance, Microsoft is up 10% this year. Oracle is up 34%. Apple is up 18%. So you can see the companies that have the biggest weight have the bigger squares or rectangles. So if you just track the top 20, this should give you an eventual direction of the SP 500. So in this case, you are looking at big companies like NVIDIA, Microsoft, Apple, Google, Meta, Amazon, Walmart, Costco. Eli Lilly is a big one. JP Morgan Chase, Berkshire Hathaway, ExxonMobil, Tesla, and so on. So you want to follow the top companies, see how they are performing, which will give you a direction that the index is taking. So in this case, instead of focusing just on the stock, maybe perhaps, instead of focusing on the currency, maybe perhaps look at the performance of these actual companies. So yes, there's a correlation between the US dollar and the SP 500. So the correlation is usually a little bit different. Think of it as a risk on, risk off. So for instance, we know that Warren Buffett is a risk off. So what we have been seeing is that he has been selling his top stock holdings, especially in Apple and other companies, and keeping the money in cash. So when he has cash, he puts this in U.S. Treasuries, which basically dries out the cash in the economy and strengthens the dollar. So in this case, we are seeing a big shift as investors keep selling their stocks at all-time highs, keeping these cash positions, which has been strengthening the dollar. But then the overall Fed policy is indicating that rate cuts are coming. So that's why we have been seeing a much weaker dollar index. So we could be seeing this continuing to be a key theme for the last couple of months in the year. So the correlation is not that direct. We can't say when the dollar goes up, the SP 500 goes up. That has not been the case. Correlation has been broken for quite a period of time. So, good question. How accurate are the currency strength meter tools? Do they communicate information that is sufficient to give someone more confidence to take a position or keep off? So the thing is, for all currency strength meters, they basically are lagging. They report on what has already happened in the markets. So they don't tell you on what will happen in the markets. So for instance, if you go to FinViz and you look at the performance of currencies, then since the market opened today, the Japanese yen has been the weakest and the Australian dollar has been the strongest. So this means that if you're looking to take a position in currencies, if you are buying a strong currency, you want to pair that against a weak currency. So it might be more logical to buy a strong currency against the Japanese yen. So if you want to sell a weak currency, then you should be selling it against a strong currency. So in that case, your sell should be against the Australian dollar. So sometimes it's much easier to think about it this way and then rely on other analysis to generate a signal, not just looking at the price history of how currencies have performed against each other. So let's see if there's another question. So pound card on higher time frame, i.e. the monthly, seems to have broken a very long persistent pattern. What's your take? Let's see, just checking this quickly. So on the weekly, I don't think we have broken yet. There's still a couple of weeks that we have not taken out. So perhaps we even stay put. So the thing is, for this week, we should be expecting to see something else. So with the Bank of Canada set to make an interest rate decision. So even if you go to the weekly chart, I don't think we have broken above these weeks yet. So there's still more room here. So even if you go to the daily and you see that the last 3 days of last week were quite bearish, so it's basically largely dependent on what the Bank of Canada decides to do later this week, whether they go for another rate cut, which would weaken the Canadian dollar, or whether they hold. That will be the key determinant of what happens with the pound card. So with that in mind, what else are we looking at? I don't know what this means. Mombasa Lini, thank you for the question. We will consider that. And the last question I'm seeing here is to check on Euro Pound as well as silver. So for silver, this is XAG against Euro. Sorry. So So silver seems to have been a big loser this morning, basically sliding further downwards, though it seems to be finding some good support. So on the daily, this is what we are looking at. So it seems like silver may have topped 3 months ago, having hit multi-year high of $32.52. So we saw a bottom last month at 26.4, and the overall price action on the daily seems more like a flag to me, or a channel that is quite bearish. Then from the forward chart, we can already see that the market almost formed what looks like a head and shoulder pattern. If this was the first shoulder and then the head and the second shoulder, then we are clearly trading below the neckline. So in this case, it seems more likely that we could be seeing some more downside momentum. So think about it this way. The market was forming higher highs from this point, just kept forming higher highs. So after forming this sequence of highs, the next set of highs were much lower, and the lows now started getting lower, which implies that we could be seeing some further downside momentum. So in this case, I would be more prepared to look for positions around this area, and in this case, to go further short. So for now, it's just preparation. Just wait for it. Be patient. Remember, Monday is a slow day. So you use it to your level best to do some analysis so that when the positions eventually approach your desired entry zones, then you're able to execute without a problem. So thank you very much, everyone. There's £0. Sorry, I almost forgot this. Pretty interesting. Market that was strongly bearish for quite a period of time seems to be changing. So if this was the prevailing trend line and this was the prevailing support, then what we are seeing in the last couple of days seems to be a little bit different. So in this case, looking at a market that has a very strong resistance here, which held for 2 days, then kept going down, found some pretty strong support around this area here. So a key question to you guys, for this sequence of days, what would you say was the average directional movement of price? Because to me, it seems like this market is now stuck in a range. So we don't have a direction yet unless the market breaks either of the two levels that I've marked on the upper and the lower side. So for now, I would stay put until we have some more volatility coming in for the week, or until the market breaks either of the two sides. For now, it's more of a sideways momentum in that market. So thank you very much, guys, and I hope to see you on the next one. So remember, we have a new episode of the Bullish Banter podcast. And as always, if you liked the session so far, make sure to leave a like, a share, or a subscription. And if you're watching this on X, remember to like and retweet. And these will help us basically push more information to more traders, and we all get to grow together. So thank you very much, guys, and I hope to see you on the next one. So the last question here, do you have private mentorship? No, I do not have private mentorship, mainly because I'm preoccupied working full-time with FX Pesa. So for now, I don't have private mentorship. So thank you very much, guys. See you on the next one.